very different across different geographies. So I'd like to introduce my panel on stage. If we could have Miriam Kiwan, Godfrey Sullivan, and Cem Soydemir join us, please. So I think between all the panelists that we have on the stage, we have a really good representation of all geographies. And this is really important to understand the digital wallet story, in my opinion, because the narrative has been very different across different countries. We've seen state-sponsored national payment systems in Brazil and India. We've seen telco-driven mobile wallets that started in Kenya, and a model that has also been adapted and adopted in the Middle East. So, fascinating narrative, excited to discuss this with you. Let's dive right in. I think, Godfrey, let's begin with you. So, could you talk us through what are the drivers for the digital wallets adoption that we've seen globally and also in the Middle East, and how they compare with each other?
Very good. Firstly, it's fantastic to be here. It's a wonderful energy to the event today. And it's great that we're talking about digital wallets in the GCC. For Visa, digital wallets are a really important development. We have seen fintechs particularly go into this space to deal with all the complexity related to payments, which for many of the banks has been a challenge to keep up with. I think the story across the GC has a lot of variability when it comes to digital wallets. And it depends on the type of digital wallet you're talking about. So we are all very familiar with the Pays, Apple Pay, and its almost ubiquitous adoption across the region is probably one to point out. This story with regard to stored forms of value in digital wallets is a little bit more variable. You have some successes of STC Pay and Careem to a degree in the UAE. But not the same degree of take-up as you have in places like Kazakhstan or in Kenya and the mobile money with M-Pesa. But I think particularly in Bahrain, one cannot fail to mention benefits. And the benefits app, which has been a real success story for this country and a great template for many other countries around the world. Wallets are so important for us. In the countries where we've had limited adoption, we're actually stepping into the ecosystem to support our banking partners. So, for example, in the Democratic Republic of Congo, we are now launching an embedded SDK wallet functionality for the banks in the Congo to enable them to profit from the better usability, the ease of payments, etc.
Well, that is pretty fascinating, and I think we'll discuss a bit more about that in some of my future questions. I want to ask you on what's the regulatory environment like, so we'll come to you for that later. But Miriam, we always read about digital wallets being touted as one of the main drivers to encourage financial inclusion. It's something that Latin America, African countries, and even some Asian Pacific countries have been using, and governments have really gotten behind this. In your opinion, how have those adoptive technologies reached the underserved population in the Middle East? How is that working out?
Absolutely. Can you hear me?
No. I think we'd like to have a handout. Yeah.
Let's use this. Can you hear me? Yeah, you can. I think digital wallets are very, very important in closing the gap when it comes to financial inclusion, and there are various reasons for that, and I'll explain. If we consider probably McKinsey's recent report, which shows that digital wallets are going to be the preferred method for payments in the next 5 years. If we combine that with the fact that we have about 67% of the adult population in the MENA region only remain underbanked and unbanked. That's about 136 million people that are young, that are digital native, and that are ready to adopt these digital wallets, especially when they don't have access to the normal banking infrastructure. Digital wallets can basically reduce the reliance on the banking system. It provides these underserved communities with the ability to send, spend, and save on these wallets. Also, if we consider the developments in the technological space, whether that's AI or blockchain or what's happening sort of in the technology world, if you combine digital wallets with regulated payment stablecoins, for example, which we issue, together with an internet-native KYC protocol, and then some of the recent ID sort of standards that are being implemented, you have an amazing tool, basically, that will completely run in parallel to the traditional banking system, and specifically impacting these underserved communities. Why? Because we're actually immediately onboarding them on the Web3 economy without having to even think about it. So by providing them this opportunity, you're basically helping them have a better economic prosperity for the future. They can decide a better future for themselves and their families, and they can actually sort of create even businesses on this new economy, which in my mind completely changes the landscape of what we call financial services today. And for us as a company, Circle has actually built its own sort of wallet infrastructure with all of this in mind.
You know, you mentioned blockchain as one of the emerging tech, and it's been the buzzword over the past 2 years. So how have you seen the adoption of blockchain for payments in the Middle East play out?
Again, for all the reasons I mentioned earlier, blockchain is a crucial part, I think, of the development of the industry, especially in the MENA region, where the governments are driving innovation and knowledge economies and focusing on these tech developments. You know, the MENA is positioning itself to be one of the leading hub within this space. Why is it important? It simply makes it very easy to send value across the blockchain. You have speed of settlement, you have lower costs, especially in a region like the MENA region, where we have, basically this is the home of the second largest outbound remittance corridors in the world after the US. So if you think about the huge amount of retail remittances as well as B2B cross-border payments that are going across different regions from APAC to Africa to Europe to LATAM, you're talking about really large amounts that blockchain can literally improve in many ways and overall improve in the payments ecosystem.
Right.
So this is where I see the role of blockchain, and this is likely to improve more. And in my mind, there are probably few conversion factors that will contribute to this growth. And that includes the fact that we have a very young population. 60% of the MENA's population is under the age of 30. These are tech-savvy consumers. They're already adopting digital wallets. In fact, in the UAE, I think 50% of the users are already sort of using digital wallets. So this is a fertile ground for blockchain and digital assets to come in and disrupt this. And ultimately, you also have a growing region when it comes to digital asset adoption. In fact, the MENA, the recent chain analysis report that came out last week showed that we are the 7th largest crypto economy in the world. With very specific use cases, which Godfrey touched on a little bit earlier. We're seeing remittances as the main cases, and then we also see store of value. To give you an example, you have freelancers that are working across the region. They might not have access to banking services again. They are choosing to actually get paid in digital assets and hold these on their wallets. In other parts of the region where you have hyperinflation, fluctuation of local currencies. Again, underserved communities are choosing to adopt these technologies as a way of hedging against inflation, as a store of value. Businesses, again, can thrive. They can have access to global markets and compete globally by accessing this technology.
You mentioned the importance of remittances, which I think is a really popular use case, in particular for the MEA region. So, Cem, we know that the G20, for instance, has set up these very ambitious goals for cross-border payments. And you being a representative at SWIFT, I want to understand how is SWIFT working to align itself with some of these goals on lowering cost, improving speed, convenience?
Thank you. I think you mentioned, Laveena, ambitious. I would say aggressive, maybe. So let me explain to the audience what those G20 targets are and what the logic behind it. So Financial Stability Board of G20 countries came together in Saudi Arabia a few years ago, and they put some KPIs in 4 pillars for the financial industry to achieve by 2027. So those pillars are cost, accessibility, transparency, and speed. So what are these? So Financial Stability Board wants every single financial institution to offer a cross-border solution from a digital channel. So this is all about accessibility. They want the speed layer or speed element in it, which is 100% of the cross-border payments should happen in less than 1 business day. And 75% of them should happen in less than 1 hour. So this is what I call a bit aggressive, or let's say ambitious. And in terms of transparency, every single financial institution who is offering a cross-border payment solution should offer a transparent one in terms of fees, in terms of status, in terms of cost, etc. And the 4th pillar is about cost. So it is asked to have a cross-border transaction which would cost no more than 1% of the transaction amount, which means, for example, if a client or a customer of a financial institution would like to make a $1,000 payment, a cross-border payment, the total cost for them should not be more than $10, which is 1% of the transaction on average. And there shouldn't be any single corridor that would cost more than 3%. So these are the targets that has been given to the financial industry. And as SWIFT, yes, we take our homework, and we are now offering value-added services to the financial industry, not only the ones who are on our network as members, but also for the others. If I give some examples, for instance, if you look at the speed element, by the help of GPI, the Global Payments Innovation, that we launched by 2017, now we see 50% of cross-border payments are happening end-to-end in less than 5 minutes. And 90% of them hit to the end beneficiary bank within 1 hour. So we are now progressing big time, but it shouldn't be kept by SWIFT network only. So if you would ask what was SWIFT's strategy years back, I would say it is to enable instant and frictionless transactions account to account anywhere in the world. But now we're not telling this. We're telling SWIFT's ultimate goal to enable instant, frictionless, and interoperable transactions, which would enable entire industry to benefit to reach out all these targets.
So it's very fascinating, as we're talking about all the positives of digital wallets. And of course, the pandemic has definitely accelerated some of the adoption, but there have always also been cybersecurity risks and security risks in general, just like there is with traditional banking. So while the regulators are still trying to figure out what are the different frameworks and policies that they need to take in place, payment service providers like yourself, Godfrey, at Visa, have to clearly be thinking about it. You gave me that very startling figure of 6 million for the digital identity verifications earlier in the day. So could you talk to me a bit about other such verification technologies like biometric authentication? What are some of the challenges and opportunities for fintech firms adopting this?
It's a really interesting space. When you look at the payments experience in the offline world, this is pretty seamless. You have your phone, you tap, payment complete. In the online world, we have a big challenge, and the challenge is identifying you as the actual person who is conducting this transaction. And so across our network, we've worked around the limitations of the internet, and so we have one-time passwords. And we send out one-time passwords to verify a particular transaction if it's been stepped up from a risk perspective. And we send out 6 million of these per day. It's an incredible burden on the industry, and it's an inefficient customer experience. So one of the major innovations that we're driving at present is something called Visa Passkeys. And this is to enable a much more seamless checkout experience. So when we're combining it with something called Visa Click to Pay. The experience is you go to a checkout online, you would enter a mobile number. That mobile number would pick up all of the Visa cards registered to that mobile number, and then the customer selects which card they want to pay with, and then for the authentication, that takes place through Visa passkeys. So there is a one-time password, the first time it is used, to bind a private key on the phone with a public key held by Visa. That one-time password binds those two together, that device, to that public key. And thereafter, it's a seamless checkout experience using the biometric authentication of your mobile phone, whether this is Face ID or fingerprint or passcode that you enter. So we think that's a big deal for merchants. We think that's a big deal for customers. You bring the seamlessness that we have in the offline world into the online world, and it makes all of the scams around stolen credentials or phishing scams essentially removed, as well as the burden of one-time passwords being removed. So I think over the next 18 months, we're going to see a much broader adoption of that across the payments ecosystem.
That's fascinating. Well, one swipe on the phone doesn't really make you realize all of the things that happen at the back end and all the digital infrastructure needed in place. That's something actually His Excellency mentioned in the morning, where when he was asked a question about regulations, he said it's not really only on the financial side of things, it's also on the digital side of things. Miriam, I want to understand from you, how do you think the regulatory environment in the Middle East is today when it comes to setting up and operating a fintech business, and what are some of the changes you'd like to see going forward?
I think the regulatory landscape is evolving in the Middle East and Africa region as a broader scope. This is led mainly, I would say, by probably Bahrain and the UAE, who have led the way over the past 5 years, first with fintech and now with digital assets, where we have very clear frameworks that define the perimeters of what players can and can't do. More recently, the Central Bank of the UAE has even expanded that to stablecoins, where it creates very clear boundaries again. So it's heartening to see these developments in the region, because without this, we cannot expect the industry to grow. Without this, we cannot onboard institutional users into the space. We cannot have large partners like Visa, for example, really embrace this. We are seeing some developments in other markets like Qatar, for example, who recently announced their market consultation around this space. So that's usually a good sign of a sort of the beginning of a baseline around sort of digital assets. And of course, in the broader region, we see that South Africa has developed a really good framework as well, and others are sort of moving towards that direction. With Kenya and potentially Nigeria now starting to issue some in-principle approvals for digital asset players. So overall, I think it's a good sign. I think this is a very important play for us to grow the region if we are to become sort of a global hub for both fintech and blockchain, as well as AI in long term, I guess. For us as a probably the issue of the largest regulated stablecoin in the world, we always focus, or we apply the principle of regulation first, right? What does that mean? That means we always go from the front door. We start with any market by going to the government. Usually we are very close to central banks and policymakers. And in certain markets where the frameworks are developed and established, we tend to work very carefully in making sure that we are active in the right way. And in other markets where we're seeing still recent developments, we tend to sort of ensure that we contribute our part as well. So we will continue to do this across the region, because with education, with sort of sharing the knowledge that we have, given that we're exposed to so many regulators from Japan to recently MiCA, which basically allowed our stablecoins to be the first to circulate within the 27 countries in Europe. Usually regulators tend to be more interested in understanding how we go through that process. So yeah, it's a very important part of the growth of the industry as well as the region.
Right. I think it's fair to assume, again, something from I picked up from His Excellency speech in the morning, where it has to be a collaborative effort, of course, but it has to come, the initiative has to come from industry, and then the government agencies have to ensure they're not getting in the way. So that's a helpful framework, Miriam.
And if I may add, I have to say, we have to recognize that regulators have a very challenging task because they have to balance sort of the ability to allow innovation to thrive in their ecosystem, but at the same time, they have to ensure that there is consumer protection, which is a very difficult one, and I think we need to recognize the hard job they have.
Right. That's a really nice segue for my next question, by the way. I was wondering how to do it. But yeah, customer protection is at the center of all of this. Even as consumers, I think every time we download an app or we want to use a digital economy experience, we're always thinking about security. What data is being fed? How is my data being stored? How is it being used? Is there opportunity for fraud? How am I protected from this? Godfrey, I'm assuming this is a challenge you're thinking about in a very focused manner at Visa. So, what are some of the challenges, and how are companies like yourself thinking about addressing concerns around fraud, data privacy, data security?
In such an important topic for us. We were talking earlier about AI. When you look at our investments across the Visa network from an AI perspective, we've seen a big uptake in terms of the performance of our developers, a 30% increase in their performance as a result of using generative AI. The area where we're really investing in AI is around counteracting the fraud that takes place and helping our banking partners to address those concerns. We've seen a real increase in bad actors. We've seen high levels in fraud, particularly in account-to-account payments. We see continued cyber attacks. Our network has 70,000 cyber attacks per day. We invest enormous amount in protecting that. And one of the things that we're increasingly doing is taking that expertise and working with government partners across the Middle East and more broadly to bring best-in-class fraud capabilities to account networks, whether this is mobile money operators or whether this is real-time payments platforms, which are setting up these real-time payment platforms and then suddenly being hit by a raft of bad actors. So the decades of experience and the investments that we've made into that are something that we think is very, very relevant to these new networks as they evolve.
I think the key learning there with security is always, like you said, you can't entirely prevent a cybersecurity incident, but you can help mitigate the risk. And that's, I think, the goal, and that's really helpful, Godfrey. We can't talk about the success and adoption of digital payments without trying to understand how these new age players collaborate with established financial institutions. And Cem, I was hoping you could walk us through what would be a really nice framework. You can't see each other as competitors. You have to be collaborative in order to pursue this digital payments adoption and increase penetration across the region. How is that playing out in the Middle East and also globally?
Okay, thank you. Thank you for that question, Laveena. So we see cross-border payments landscape is much more fragmented than before, especially when you think about low-value payments, which mainly considers the importance for the retail customers and the SME customers of the financial institutions. And there is no one ultimate solution that will tie up entire, let's say, end users, because it's not only banks anymore. You were mentioning at the beginning that wallets. So many people use only wallets, not bank accounts. So once they can receive payments from their domestic, let's say, targets, or if they want to receive domestic payments, they would expect the same from the cross-border payments as well. So what is now happening is, as I mentioned, our also goal is to be the one who is going to interoperate those networks and those players, and to become maybe let's say, network of the networks, So we started to collaborate with all those fintechs, big technology companies such as Visa, etc. So I can give a couple of examples. Lately, you may heard about TerraPay's announcement that they allow banks to make cross-border payments to wallets by using SWIFT. So that makes us not to reach only to bank accounts, but also wallets. And also for the ones who are using other networks, that interoperability is key. Last year, we announced our partnership with Visa to enable the GPI tracker, the tracking capabilities of GPI for B2B Connect, as well as the pre-validation capabilities of the network for the usage of the other networks. The other example that I can give you, the collaboration with Swift and Wise. So for Wise transactions, now Wise is, let's say, taking the opportunity to use pre-validation of Swift so then they could validate whether the end beneficiary account exists, whether it is enabled to be received funds before they make the transaction. So these kind of collaborations are going to increase in this fragmented world. I think it is very important to combine all these because it's not only those networks growing, there are bilateral agreements that are increasing. So the more instant payment schemes we see, the more collaborations or MI interlinkages that we see among those domestic markets as well. We can give a couple of examples such as India and Singapore, India and UAE, like connecting the domestic market infrastructures, the MPCI and INE together to make a cross-border payment without any need of a network or an aggregator in between. So in order to give an ultimate solution to the end users to enable instant and frictionless cross-border transactions to any kind of payment on cross-border, we need to work all together.
Okay, I recognize we're running short of time, but I do want to squeeze in one question because we can't have a conversation on digital wallets without, especially in Bahrain, without talking about central bank digital currencies. So, Cem, I'd stay with you on that. If you could talk us through what we can expect, what is the potential out there, in particular for the Middle East?
Yeah. So when we talk about CBDCs, I think this is also a part of that fragmented cross-border payments landscape because digital currencies are being built. As of today, I think around 11 to 12 countries have their own digital currencies on the blockchain technology. And more than 130 countries are looking after CBDCs. Some of them are on the exploration phase, some of them are piloting. But this creates digital islands. So we need to interconnect or make those digital islands to speak each other as well. So there are also CBDC discussions ongoing in the UAE, in Saudi, in Bahrain. So they're also piloting. They would like to see whether it is going to work or not. And some of them are also even one step further to say, okay, we are going to launch our CBDCs. But then once these are all go live, there will be needs, the use cases, such as I have digital currency account, and I would like to make a cross-border payment to a fiat currency account in another country. So who is going to do that? Or I'm going to send a cross-border payment from my digital currency account to another digital currency account, which is another currency. And these CBDCs are working on different technologies or different technology aggregators, etc. So who is going to make them connect to each other, speak to each other within the same standards? You'd make the conversations, make those payments, enable them smooth, frictionless, and distant. So as Swift, we also started piloting this. Last year, we completed the first phase. This year, we completed the second phase. Around 36 central banks, plus some usual suspect global transaction banks are involved in that project. And we showed that Swift is now capable to interoperate in between CBDCs and fiat currency accounts. So we are now getting prepared for this, and we would expect the world to get prepared for this as well.
Well, that sounds like an evolving landscape, a space that probably we should all be watching out for. Before I let you go, any burning questions in the audience? We have time. Yeah, lady ahead.
Hi, I'm Saad Radi. I would like to ask about the role that digital wallet would play in the metaverse space.
I'm sorry, could we have a volume a bit higher
Yeah.
so we're able to hear you?
What role digital wallet would play in the metaverse space?
Anyone would like to take that question? Sorry,
Sorry, I couldn't get the question.
couldn't hear her well. Yeah. Could we increase the volume?
Increase the volume. Shall I
Sorry,
repeat the question?
yes. Yeah.
Okay. What role digital wallets would it play in the metaverse space?
The digital balance?
Digital wallets.
Anyone on the panel want to take that question?
Digital wallets in which?
Digital wallets play in the?
In the metaverse play.
In the metaverse.
Oh, the metaverse. Oh, the metaverse.
What role? Okay.
Oh, the metaverse. People are still going to the metaverse, are they? Well, so I think I think there was a lot of excitement about the metaverse. I think how many of the online experiences are evolving is these are essentially walled gardens. And if you've got users within those walled gardens, there's very little appetite to let users go from one environment to another. So I think from a Visa perspective, we're very interested in partnering with those networks in terms of on-ramp and off-ramp capabilities. I think one area which I am a couple of areas which I'm very excited about. There's a really interesting project that's been run by the BIS and the Institute of Financial, the International Institute of Finance, Project Agora, looking at regulated tokenized deposits and how the industry can come together. There's 7 central banks and 40 commercial banks that are working on a pilot to enable instant cross-border settlement in both commercial bank money and central bank money simultaneously. I think that's a really interesting area. I think when we think about the stable coins, there's a great company called Felix Pago in the US. It has 10% of the remittance volume from the US to Mexico, and it doesn't even have a wallet. It uses stable coins linked to WhatsApp transactions. So you sign up, you talk to an AI chatbot on your WhatsApp account, and then you send stablecoins across from a regulated stablecoin entity in one country, the US, to a regulated stablecoin entry in Mexico. Super relevant, really relevant for Bahrain, given the regulation you have in the crypto industry. So those are a couple of things which I'm probably more excited about than the kind of the evolution of wallets in the metaverse.
I don't mind adding to this as well. So I think the combination of digital wallets and stablecoins specifically would play a huge role in the metaverse beyond some of the use cases that were shared already by Godfrey. I think it would be the unit for transferring value across the metaverse, especially when we look at interoperability between sort of different metaverses, for example, as that becomes more improved. I think you see that value crossing between different states, if you like. Also, if you consider some governments using the metaverse as part of their smart city initiatives, again, the use of digital wallets, as well as stablecoins specifically. I mean, digital asset in general, but stables, I think, will play a very important role in this.
Well, I'm afraid we don't have time for any more questions, but our speakers will be available in the speakers' lounge. And on the metaverse question particularly, we have a panel tomorrow on tokenization where we have a representative from the Metaverse Institute. So do join us for that session as well. Thank you very much, Miriam, Godfrey, and Cem for this panel.
Thank you.